I tested a trading strategy that gives signals every single day, and the results shocked me. Stay with me for the next few minutes, and you'll learn how to use it step by step to spot profitable setups starting tomorrow.
Before we dive in, make sure to hit the like button and subscribe so you don't miss any of my daily trading strategies. Trust me, you'll want to stick around till the end. Before we get into today's strategy, let me tell you the #1 problem that 90% of traders face. Most of you don't have a clear trading plan. Maybe you've taken a course with 20 different setups. So every morning, you wake up and try to scan the charts with all 20 variables, hoping to find the perfect trade. And what usually happens? You finally enter one, it hits your stop loss, and then the cycle repeats until you end up with a big loss and feel like giving up trading altogether. And I'm pretty sure you're not using proper risk management either. But don't worry, I'll show you exactly how to fix this. And I promise, if you stick with it for a few months, you'll reach consistent profitability. Instead of trying to learn 10 different strategies, here's the secret. Just pick 2 or 3 strategies, master them, and trade only those. I promise you, if you stay consistent with this, you will see results. And here's the best part. At the end of this video, I'm going to give you a magic money management plan that makes it almost impossible for you to blow up your account. So stay with me. All right, now let's get into the strategy itself. Out of the 3 strategies I usually teach, today we're going to focus on just one. Most of my setups are based on impulse moves, sharp, strong moves in the market. Because when there's a clear trend, there are a lot of hidden orders sitting in the market. And once price pulls back, those orders can fuel another big move. Today, I'll test this strategy on Bitcoin. And we all know Bitcoin is famous for its crazy moves. So if it works here, it will work on any forex pair or crypto chart. Now, the type of move we're looking for is very clear on the chart. Price separates itself cleanly from the previous candles. And here's the key. All the candles in that impulse must be the same color. You shouldn't see an opposite colored candle in the middle. And this next rule is super important. You need at least 3 or 4 consecutive same-colored candles, not less than 3. Like in this example, everything is perfect. Now what we do is mark the first and the last opposite-colored candles before and after those 3 or 4 impulse candles. So in this case, it would be this candle here and this candle here. From the wick of the first opposite-colored candle to the wick of the last opposite-colored candle, we draw a box around that area. Next, we carefully find the midpoint of the box, draw a horizontal line through it, and extend it to the right. This creates what's called an imbalance, gap, or FVG. Different strategies call it different names. The concept is simple. Since price didn't cover this area and no opposite candle actually filled it, there are likely unfilled orders left behind in that zone. So when price comes back, there's about a 70% chance it will react to this level. And that's exactly what we want to take advantage of, this golden opportunity. I personally call this setup in-trend FVG, the imbalance inside the trend. Here's how we take the trade. When price pulls back, you place your limit order right on that horizontal line we drew in the middle of the box. For the stop loss, place it safely outside the box. Don't be stingy with your stop. Don't put it too close. Otherwise, a single wick can stop you out for no reason. Now for the take profit. Set it at a fixed 1 to 1.5 risk-to-reward ratio and close the trade there. Why 1 to 1.5?
Because yes, you could aim for higher targets, but the chance of price actually hitting them decreases. The beauty of this strategy is that it gives you a lot of trade opportunities with a high win rate. So with this moderate reward ratio, you can steadily grow your account trade after trade, win after win. And I can guarantee this works. I've marked dozens of examples on the chart, and you'll clearly see the number of take profits massively outnumbers the stop losses. And that's exactly what leads me to the key insight of this strategy, the winning streaks of consecutive take profits.
Now, let's talk about the key strength of this strategy, the consecutive take profits. With this simple trick, you can literally double your profits compared to the normal method without taking any extra risk on your capital. Yes, you heard me right. No extra risk. On your first trade, let's say you risk 2% of your account. If it hits take profit, your reward will be 3%. Now, on the next trade, instead of risking the same 2%, you risk only the 3% profit you just made. So now your risk is 3%. And if that trade also hits take profit, your reward becomes 4.5%. So in just 2 trades, you made 3% plus 4.5% equals 7.5% profit. Notice what just happened. You didn't increase your risk on your actual capital, yet you earned 1.5% extra profit. Basically, the same as winning an extra trade without even taking it. Now imagine this compounding effect over 10 trades. The results can be massive. Here's the golden rule. After your second take profit, reset your risk back to 2% and repeat the cycle. If your first trade hits stop loss, you're not allowed to increase the risk. Keep it at 2% until you win again, then you can apply the compounding trick.
If you found this strategy helpful, hit the like button, subscribe, and turn on notifications so you don't miss my next advanced trading strategy that increases accuracy even more. Apply this method consistently and watch your account grow steadily. See you in the next video.